Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Monday the 19th of September. I want a divorce. That's right, you heard me right, I want a divorce. Not from my wife, who I love very much, but I want a divorce from, well, it's okay, it's a little bit of a teaser headline. But the reality is Angela Merkel, the German chancellor, must be thinking that she would love a divorce from these other Euro countries. Politically, it would solve a great many problems for her. Here you have Germany, who is Europe's economic powerhouse, pulled down by the likes of Greece, Spain, Portugal, and Ireland. If you were in Angela Merkel's shoes right now, wouldn't you want a divorce from these countries? I know I would. Now, the politicians can't blame this one on the banks. They were the ones that overspent. They were the ones who recklessly put in place programs that they didn't need, that cost too much, just to make them feel good. So there you have it. It's not the banks. It's the politicians this time who are the problem. Does anybody honestly believe that Greece is going to pay back what they owe? I'm not sure that when Greece goes under, and it will, if Ireland, Spain, or Portugal will be able to hold on. For sure, Greece is never going to be able to pay back its debt, which now stands at 165% of GDP. There's no way that Greece can get themselves out of this. Lastly, everyone loved the market on the upside last week. Today, that sentiment has changed as once again, problems in Europe are at the forefront of every investor's mind. Europe is the tail that's wagging the world economy right now. Okay, let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. But first, times like this, you really need personal coaching. And you may want to find the fastest, easiest way for you to improve your trading. Well, here it is. It's one-on-one Market Club personal trading. Give the number on the screen a call. Give us a call at 1-877-219-1482. We have people standing by to take your calls. It's a free consultation. I think you'll really enjoy what you hear. But see if it's right for you. That's all we ask you to do. So let's go to the markets. And we're going to go to our portfolio manager. And the first market we're going to be looking at is not this one. It's going to be the S&P 500. That was the CRB index we just looked at. Okay, here we have what I think potentially, I'm going to scope this out just a little bit further because I want to show a bigger picture. And let me just take that off the screen. So here we have our trade triangles, our long-term monthly trade triangle still negative. That's the major trend indicator that we use. That's still negative. Our green triangles are the weekly and the daily, which are counter trend rallies right now. We mentioned that last week. We're in a plus 60 situation, which means it's a trading range. And in my opinion, we're at the upper end of this trading range right now. What I think is going to happen, and let me get my telestrator on the screen to share this with you, is this. And I'll explain later on with another market just how this occurred. So here we are. This is the big top we talked about, the big head and shoulders top we talked about. The market came down. We've come down dramatically like this. Now I think this move right here is going to prove to be just another move to the downside, and we're going to resume the downward trend just like we did in the CRB index, which we talked about earlier last week, and we'll talk about again today. So this is what the challenge is. Certainly, if you measure this move down, or you measure from this level here, let's say the 1120 area, up to the highs, which was right around 1230, give or take 1 or 2 points. So that's 110 points. So you subtract 110 from this level, and what does it give you? 1,110. So potentially, I think we could see this market go quite a bit lower. And I think we could see, excuse me, this is going to give 1,000. Let me just do the math real. Yeah, 110, 010. This should be 010. 1,010. I hope you can all read that. So indicating that this market could go quite a bit lower to the downside. We've been talking about this all last week, and we thought this rally was a counter trend rally, much like this was a counter trend rally here, and this was a counter trend rally. So this is the last one, I think, and I think we'll see the market turn back to the downside for a move to the 1,000 level, to possibly even the 950 area. So still looks negative to us, and the trend is your friend, and the big trend in this market is the monthly trend, and it's down. So let's take everything off the screen, So you all have that. It's 1,000 to 950 is the target zone on the downside. So clear that. And we'll go to our next market. Now, the silver market was a big disappointment to a lot of traders, but reality is you're doing a couple of things in silver. And I want to really bring this to your attention because it could be very, very important. And moving this along. So again, we have our weekly trends just turned negative at 39.29. It's 39.27 last. This is real time. Dailies have been negative from 41.56. And only the monthly is in a positive mode, indicating the longer term trend is still positive. Now, if you look at the highs that were set back here, we've had the move down, we've had a counter trend rally. The question is this market rolling over to the downside? Well, certainly if our monthly trade triangle turns red, I'd have to say yes. And this could be a potentially similar formation, to what we saw in the S&P 500, where you have this potential head and shoulders top. Now, again, we're at the lower end of the Donchian trade channels. We are oversold, and that would indicate that we are going to see possibly a bounce from current levels. But this has got to be disappointing for the bulls who are bullish on silver. This market has not participated, and we've talked about the Jekyll and Hyde-like personality that silver has. One time it's a precious metal, the next time it's an industrial metal. So again, it's, what is it today? Maybe it's an industrial metal and the markets are going down, the equity markets are down, so therefore there'll be less use for silver, demand for silver, so forth and so on. So you can read that for how you want to read it. But again, we're going to rely on our trade triangles, which steer us always in the right direction. Longer term, it's a key. But right now, we're sort of in a trading range, a mixed bag. And if you look at silver, it's just sort of going really nowhere in particular. So we're back down to levels we saw in early August. So let's take this off the screen, go to the next market, which is gold, which is a little bit of a different picture. And I'll share that with you right now. So let's go to gold. And I'm going to go this a little bit closer in so you can see. But gold has come down today, obviously very disappointing. You think with all the problems with euro and the stock market, gold would have been up. Not so. But our two indicators here are positive, and that is our weekly right here and our monthly trade triangle. Only the daily is negative right now, but we do have a 55 reading. When we get a 55 reading, what that is a trading range. So we use, in a trading range, we use the Donchian trade channels, which are right here, sort of coming along, and the tops here. And we are also going to use our Williams percent R indicator now. I'm going to scope this out. I'll have to clear the screen and scroll this down so I don't change things, but let me just clear this and go down on this, and you'll see quite clearly, I think that gives you a good picture, that we're close to the bottom, close to the lows of the Donchian channel. It's not a bottom, but we're also very oversold here, indicating potentially we may see a bounce in this market, particularly as our monthly and weekly trade triangles are still positive. That's the key thing right now, is they're both positive, and if they remain positive, then we have to obviously abide by the longer term trends. But right now we're oversold, and I would not be surprised to see some sort of a bounce. But the market's very, very negative. A lot of liquidation coming into this market today from people who were disappointed, because this market was trading around 1824 overnight, and it's now trading at 1775, so 77 rather. It's a big disappointment to the bulls. But again, let's see how this market plays out. You can see the kind of swings we've had here just the last 3 or 4 days. This is Friday. This is obviously, this is Sunday night, by the way. This is Thursday, so you can see down, big up, boom, boom. So let's see what tomorrow brings in this market, but it should be watched very, very carefully. But generally speaking, our parabolic is on the negative. We're towards the lower end of the Donchian trade channel, so we should find some support, particularly around the, we're looking for support around the, I think, 1775 area, 1780 area, somewhere around there. So we're pretty much there at the, 1775 and 1750. That's where we're looking for support. So let's see how that plays out tomorrow. So let's go to our next market. Next market is crude oil. As you know, we've been very negative on crude oil based on a long-term trade triangle. Again, this is what I want to emphasize. If you pay attention to the long-term trends, you tend to see markets go back in the direction of the long-term trends. So now we have in crude oil, we have excuse me, let me just get my telestrator on again. We have our daily, which is negative right here, and our monthly, which is negative. Only the weekly is positive right now. So you've got this sort of mixed bag where minus 75 indicating the bias is towards the downside. Certainly this close here, 85 should be support, but a close below that level is going to break a long-term trend line. Let me just draw that in and share that with you so you can get an idea of what I'm talking about. So let's just clear this off the screen, and let me draw this trend line in that I'm looking for. So here's our trend line tool right here, and when it turns yellow right here, there's a yellow box, it means it's active. You simply go in the lowest point right here, pull this up, and boom, like that. It's a great trend line. Now we're trading very close to where it'll be a breakout to the downside, indicating this market could go lower. Now obviously with the economy, or the stock market indicating the economy is not good, demand should be lower for oil. That's the fundamental reason, but we trade based on technicals because the market tells you eventually what it wants to do. And again, it would appear as though this market is actually telling you it wants to go lower. And I would not be surprised to see the market test the 78 to 75 level. Now we are getting an oversold condition right here, but the other thing that's interesting is that we're just beginning to turn down on the MACD, which is not a good sign for this market. So really pay close attention. You've got a lot of negative things coming in here, but generally speaking, this market, a close, I would say, under 85 today will not be good for the crude oil market. This is the October contract we're looking at. So let's go to our next market. The next market is the dollar index, which we have been very bullish on. And I'm just going to put a line chart on here to give you a better idea. And again, you've seen me draw this out. I'm going to take a little bit more of a position here in terms of show you more of the chart, and I'm also going to take off the Donchian trade channels and also the parabolic just to make it very clean and simple. So there you have a 90. It was 100 earlier on today, but the reality is if you just draw this is why I love about technical analysis. It's visual, very visual. If the markets, you can see, I mean, a 5-year-old could see this trend is going higher. And I think that's the key thing, is the trend is going higher, and you've basically got this big energy field. We talked about this before. You've broken out right here to the upside, and you came back and tested it, and now I think we're going to see this market go higher. And there's a lot of people who are negative on the euro right now, and rightfully so. Now the question is, currencies are a little bit different from commodities and stocks. You can get an oversold condition persisting in currencies for a long time. That's the key thing, because, or an overbought condition also, because it's such a big market, lots of players. But generally speaking, we're looking for this market to go back up to the 80, 81 level, which is where we pretty much started the year. You can see we started right here, right around these levels, and we're going to go back up there, which means the dollar will be unchanged for the year, which will be pretty interesting to see if we close at those levels towards the end of the year. So again, very positive. Now this is the next market we're going to look at, is going to be the CRB index, which we first looked at when we came on board here. Now this is a little bit concerning, and I want to take, let me get this a little bit, and let me just take this off the screen. And boom, take that off. And what I want to share with you now, we've seen, we had the monthly, you saw the big rise in the monthly. This is why the monthlies are so important. They just don't come in that often. And when they do, you really want to pay attention to the market. Now, it would appear as though this market is again, let me get my telestrator on so we can share this with you. It would appear as though the CRB index, the Reuters-Jeffries CRB index, is sort of rolled over. Hold on, did not want to do that. And it seems as though we're just rolling over here to the downside. Now, here's the concern. If we continue to go down like this, and it's potentially, we could definitely do that, is it would be deflationary, which means it could be very negative for a lot of things, mainly gold as well. And also, you are looking at, let's just look at this in a Fibonacci light, and let me just take everything off the screen, clear this up, so we're on a very clean page. So with the Fibonacci, we're going to go from the very high point, drag this down to the lowest point right here, and you could see, we could certainly see this market go down to the 300 level, maybe even lower. So it's another, I would say 8 to 10% lower than we are right now. And we could see that happening just as it erodes. And this is the key thing to remember with bear markets. They don't give you a lot of opportunities. They just sort of weigh on you. Not a lot of opportunities to get short or even get out if you're long. So pay attention to that very closely. Most people have not seen a good bear market, or big bear market, a persistent bear market take place. They've always been sort of short and sweet. But I think this is a little bit different here. I think we'll see this market be on the defensive for the rest of this year, certainly, and probably the most, at least till the second quarter, even the third quarter of 2012. Hey, this is Adam Hewison. Thanks for stopping by. I've enjoyed this. I hope you have too. Be sure to watch our show this Wednesday, and also be sure to tune in tomorrow at 1 o'clock. We'll have an update, and we're going to try to incorporate some commodity markets tomorrow, so stay tuned.